Are you a newly formed Delaware corporation and not familiar with your annual filing requirements? This video will provide you with the information to determine which Delaware franchise tax calculation is best for you. If you are new to Delaware, you likely received an enormous franchise tax bill from Delaware that you didn't expect. The default calculation Delaware uses to determine franchise tax payable is the authorized shares method. Hang in there, there's an alternative method that may drastically reduce the amount of franchise tax owed. The assumed par value capital method for calculating franchise tax takes your total gross assets at year end and your total issued and outstanding shares of stock to determine an assumed par value. That assumed par value is calculated with your actual par value to determine your total tax. Let's break this down with some actual numbers. This calculation spreadsheet is provided by the Delaware Secretary of State at the web address you see here. This gets kind of technical, so stay with me. Starting with your total gross assets, we'll use $50,000 for this amount. Then add in the total issued shares of capital stock. This includes common and preferred stock. This calculator will automatically divide the assets into the shares to determine your assumed par value. Moving down the spreadsheet, you will enter the total number of shares of each class of stock together with their actual par value, the number found in your organizational document. This will determine your on par value stock. To figure the tax, divide the assumed par value capital, round it up to the next million, divide by 1,000,000, then multiply by 400. In this case, the assumed par value capital is $50,000. Round it up to 1,000,000, divide by 1,000,000 equals 1. 1 times 400 equals the minimum Delaware annual franchise tax allowed. So you get a full understanding of how your franchise tax may fluctuate. Let's change the numbers to demonstrate what may increase your franchise tax using the same assumed par value capital method. In this case, let's assume your total assets are 5,000,000 and your total issued shares of stock equals 1,000,000. This will calculate your assumed par value to 50 cents per share. After entering the actual par value of your issued stock, the on par value of the stock is calculated to be $5 million. Next, we divide this on par value stock amount by 1,000,000 and get 5. Multiply 5 by $400, we get a total franchise tax bill of $2,000. In this case, having a greater amount of assets and a lower number of issued shares of stock creates a larger tax bill. When you file your annual franchise tax, visit this website and file by March 1st of each year. Late fees and interest penalties incur if you file after this date.